Financial institutions will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is titled Promoting the Health of the Banking Sector, Reforming Resolution and Broadening Funding Access for Long-Term Resilience. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I now recognize myself for 5 minutes for an opening statement. Thank you to our witnesses for being here and for offering their expertise on this important discussion. Today we will explore a series of topics that focus on promoting a healthy banking industry for institutions of all sizes. We will examine ways to promote competition in the FDIC's resolution process for failed banks and explore how decisions made in response to the 2023 bank failures, such as the invocation of the systemic risk exception to guarantee all uninsured deposits, created unnecessary uncertainty at a time when clear guidance was especially necessary. We will also look into potential reforms to the FDIC's bidding process for failed banking assets and liabilities with the goal of ensuring that community banks have a fair opportunity to acquire all or part of a failing institution, community banks and regional banks, particularly when such outcomes best serve the interests of local communities. More broadly, the least cost test should not operate as a rigid constraint that effectively limits participation in the resolution process to only the largest institutions. We want all institutions of all sizes to be able to bid on these failed banks. We will also discuss how access to diverse funding sources allows banks to remain competitive and continue to serve their communities. The current misalignment in the regulatory treatment of brokered, reciprocal, and custodial deposits have placed handcuffs on small, well-managed financial institutions' ability to sustainably fund themselves, and reform is necessary. I look forward to hearing from the witnesses about how legislation attached to this hearing would remove unnecessary barriers to bank funding, ensuring banks have access to diverse and stable sources of deposits that allow them to continue the lending activities that make our economy thrive. Restrictions on various deposit types, such as brokered, reciprocal, and custodial, should be based on actual risks to stability, not the whims of banking regulators. Finally, we will highlight the imperative that Congress right-size the capital framework for small and mid-sized banks in the post-Dodd-Frank world. Our capital regime has moved too far away from a tailored system, negatively impacting small and mid-sized banks and hindering their ability to survive and compete against larger institutions. We must reverse course on this, as a diverse banking system is at the heart of a resilient and competitive banking sector. On a bipartisan basis, Congress directed regulators in 2018 to tailor regulations based on an institution's size, risk profile, and complexity. However, under the Biden administration, regulators failed to fulfill this statutory mandate, and we look forward to new leadership to ensure that a regulatory scheme designed for the biggest banks does not become the rules for all banks. Luckily, the regulators have the tools to further tailor regulations and reduce red tape, hampering the growth of small and mid-sized banking institutions. This committee will continue to urge the federal banking agencies to use the authorities they currently possess to provide much-needed relief for banks while protecting financial stability and safety and soundness. Community and regional banks have the unique ability to put necessary cash in the pockets of local businesses. And today's discussion will highlight the need for reform to guarantee long-term resilience and access to capital. The overly burdensome regulations imposed by the Dodd-Frank Act and subsequent rulemakings from the federal banking agencies have crippled community banks and mid-sized banks and regional banks through heightened capital and liquidity standards, narrower sources of funding, and a miscalibrated bank merger review process. I look forward to hearing from our expert witnesses on these important topics and what we can do in Congress to reverse the negative impact of burdensome regulations. With that, I yield back.